This is Bloomberg Businessweek Daily, reporting from the magazine that helps global leaders stay ahead, with insight on the people, companies, and trends shaping today's complex economy, plus global business, finance, and tech news as it happens. Bloomberg Businessweek Daily with Carol Massar and Tim Stenovec. Live on Bloomberg Radio, television, YouTube, and Bloomberg Originals.
And a very good afternoon, everybody. I want to look at you, but I feel like I have to stay glued to my Bloomberg because I can't tell you, this Tuesday has been crazy with the amount of headlines coming our way. A very good afternoon. Carol Massar, Tim Stenovec, live here at Bloomberg headquarters. And Tim, 30 days have September. You know how that goes.
The government shuts down at the end of the month? Is that how it goes?
That's, I think, one version of it.
I thought that's what you were going to say. It doesn't have the same ring to it.
It does not. It does not. It is the last day of September trading, last day of the third quarter. Man, I got, an S&P 500 that's on track for its best September since 2010, but there is a lot still coming at us.
Yeah, short-term headwinds in the form of quarter-end rebalancing. Goldman Sachs traders expecting pension funds here in the U.S. to sell $19 billion of equities. We're glued to the Bloomberg, and we'll bring you anything that we see as it moves.
All right. So what's coming up in the next 60 minutes? We're going to get into the AI spend, man. That has been a big trade for the last two and a half years here. Another big story today, CoreWeave, a Bloomberg exclusive, inking a $14 billion deal with Meta. We're going to get into the details of that and really talk about the AI trade overall.
Well, on that and on the concentration risk when it comes to the market, AI and more, we've got Charles Schwab's Kevin Gordon in the studio with us. He's going to be chatting with us in just a couple of minutes.
Also, the government shutdown and the architect behind the president's grand plan. That is something that is certainly top of mind. And then, Tim, when we talk about shifts, demographics, things that are going on when it comes to the management of money, we are definitely seeing a big shift when it comes to women and really them controlling so much money going forward.
All that and more coming up over the next hour right here on Bloomberg Businessweek Daily. First up, a check of the day's trade and top business stories. Here he is, Charlie.
Hi, thank you very much. We got lots going on. We got you covered here at Bloomberg with the Dow, the S&P, NASDAQ, all declining here. Possible shutdown Tuesday. S&P right now down 11 for the S&P 500 index, a decline right now of just about 0.2%. The Dow down 130, drop there of 0.3%. And NASDAQ, the composite index, down 64, a decline of 0.3%. So stocks are dropping at month end, a month that's marred by shutdown woes, with the 10-year ahead of that potential shutdown, 4.13%. The 2-year right now, 3.59%. Gold up 0.3%. The precious metal, 38.43 the ounce, and a retreat for West Texas Intermediate crude down 1.6%, 62.41 a barrel. Pfizer CEO Albert Bourla says the company has secured a 3-year grace period from President Trump's promised tariffs on pharmaceuticals in a deal that would lower some of the company's U.S. drug prices. You heard the president make the announcement here on Bloomberg. Pfizer shares, they're gaining 5.6%, but rivals Lilly and Merck also higher. Lilly right now up 3.7%, Merck up by 5.2%. Again, recapping here, stocks lower, the Dow, the S&P, NASDAQ, they are all in the red. S&P again right now down 10, drop there of 0.1%. And for on-demand news, 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. All right, let's get to it because we are certainly talking once again about the AI spend, and in particular, one of the dominant players, I feel like, safe to say this year. We're talking about CoreWeave. Shares right now are up about 12%. They were up as much as 16.5% earlier in the session. This on a Bloomberg exclusive that the company has signed a deal to supply Meta platforms with as much as $14.2 billion worth of computing power, underscoring, Tim, that massive costs of developing and running advanced AI models.
CoreWeave shares have been on a tear. It's been an outperformer this year following its IPO just in the spring. Shares up since then more than 270%. CoreWeave CEO Michael Intrater talked with Bloomberg's Ed Ludlow, the co-host of BTech on Bloomberg Television just last week, about demand from customers.
The challenge that we have is competition among our clients for the infrastructure that we have, right? It is not a question of giving up one client for another client because their demand doesn't completely absorb all of our infrastructure. It's just a question of we have 100 units of compute to deliver in the next 12 months. We could deliver all 100 to client number 1, all 100 to client number 2, or all 100 to client number 3. And the question is how are we going to divvy that up among those clients?
And it sounds like you don't want to be client number 4. All right, let's get to it. That is CoreWeave CEO Michael and Trader with Bloomberg's Ed Ludlow, co-host of Bloomberg Tech, I should say, on Bloomberg Television. Of course, 11 to 12 every day on Bloomberg Television. Ed, right now in studio. Ed, it does sound like another big deal with what feels like it's got a big window on visibility for CoreWeave. Lay it out for us.
Yeah. CoreWeave has 33 data centers, mostly in the United States, some in Europe, and they are all humming and they're all being used up. And honestly, that answer in the context of the Meta news today was a bit of a cop-out because they are supply constrained. In other words, they have all these deals on paper that extend over a long period of time. In Meta's case, the deal that we broke the story on today goes through to 2031 with an option to extend to 2032. It's not yet real. There isn't a data center among those 33 that's going to, from today, run Meta inference or training workloads. But the thing to understand is that CoreWeave's magnificent run since its IPO, which Tim alluded to, if there was one piece of downward pressure on the stock that maybe was holding it back a bit, it was this idea that it only had one customer, which was Microsoft, accounting for 70% of revenues. And the simple answer to the move in the shares today is the market saying, good. We like to see diversity in your customer base, even if it will be a few years that this stuff comes online.
Why would a customer go with CoreWeave rather than another provider?
Because compute capacity, whether you're talking about literally the building of a data center or changes in generations of chip, takes many years and billions of dollars to come to fruition. The way that Michael explains it is they're not going to do a deal where they don't have some idea of which data center or even some idea of like the energy supply for it, right? But the reality is this is probably 2 years away from Meta running these workloads. And at the same time, Meta is also trying to build its own data centers.
Right.
It's just an acknowledgement that they will need more than anyone can do at any given time. And the thing you need to understand about CoreWeave that puts this all into one place is that largely what Microsoft does with CoreWeave is give it the workloads it can't handle itself. Microsoft has many of its own data centers. There's just too much.
It's kind of an outsourcing,
It's
or it
an
is an outsourcing.
Exactly so.
One of the things I want to ask you is this kind of starting to feel a little bit silly in terms of the spend, the build out. It's got this also incestuous feel of the companies working together, supplying things to one another, benefiting by the partnerships. It's just starting to feel a little bit close. And some much smarter than me are suggesting that this doesn't quite feel right. Will the revenues and financial payoff be there after the spend?
So this is what Wall Street calls circular financing.
Correct.
And you know, the greatest example of that is OpenAI and NVIDIA, but it could extend to CoreWeave.
Well, explain the OpenAI and NVIDIA, because if OpenAI gets money from NVIDIA to then go and buy from NVIDIA?
Yes.
OpenAI received a $100 billion investment from NVIDIA.
Over a number of years.
Equity investment over a number of years, a decade. So it's actually defined by gigawatts of data center capacity. For each 1 gigawatt, it gets $10 billion in the form of, actually, we don't really know. That's the thing. We don't even know. Like, is NVIDIA just going to write a $10 billion check, or is it going to give it chips in lieu of cash? So anyway, the argument is that OpenAI just takes that capital in whatever form it comes to then buy $10 billion worth of NVIDIA chips.
Right.
So the critics and the bears would say...
Shell game? Oh, no. I'm not going to say that.
Carol.
As I said, some smarter than me have questioned this, and I'm just trying to be smart.
Like on X, people have used the phrase Ponzi scheme. So, like, I understand that. At
the same time, Tim and I are playing around with ChatGPT.
Don't bring me into this.
Using these tools and are kind of blown away.
The bear case is that the big picture forecasts that the market or industry for AI accelerators or GPUs, before you take into account electricity supply, concrete, labor to build data centers, is $4 trillion. That number is being artificially inflated by the circular financing mechanism. The counter argument to that is, well, there are plenty of software companies making a ton of money, higher margin revenue because of the investments they made in the last 2 or 3 years.
We see that in the earnings cycle.
Yeah. Start looking at debt, because a lot of this is underpinned by debt. And that's a little bit worrying to some in the market. Others are completely
These
sanguine.
neo-cloud companies, right? There's a lot of debt involved.
Yes, correct. And also, like collateralized loan offerings, they need issuance. M&A needs issuance, but I would start tracking it on your fingers, or if you're lucky, use your Bloomberg terminal.
I was going to say you might start using your toes because it's getting so big at this point too. The flip side of that, though, Ed, is that there are those out there who argue that the productivity increases that we're going to see from these investments and the innovation that we're going to see from these investments, that's going to be huge.
Yeah, but oh God, I've missed you guys so much. Do you remember 2 years ago, and I know it's hard to remember last week, I would talk about the money machine.
Yeah.
So in productivity and stuff, just customers that have spent some capital expenditure, or they've made some kind of licensing deal with OpenAI or whatever it is, what is their top line growth and bottom line growth been in the last 2 years? Is that evidence that they have had revenues in new areas? Some cases the answer is yes, some cases it's no. I don't, I'm trying to think of an example like Salesforce. What does Salesforce even do? But these are where you should look for evidence of that. Yeah.
All right. Good stuff and good setup for our next guest, Ed Ludlow. Thank you so much.
He's here all week.
I know.
He's coming back.
2 shows nightly. Try the veal. Bloomberg's Ed Ludlow. So appreciate it. Co-host of B-Tech on BTV. Catch it at 11 a.m. Wall Street time on Bloomberg TV. We want to continue with the AI spend and so much more when it comes to the market environment. So great to have back with us Kevin Gordon, Chief Investment Strategist for Charles Schwab, right here in studio. There is so much coming at us. Let's start big, broad, and we'll get into AI. What do you make of this year?
Well, I think that in terms of the market's returns, that has been, a dominant theme. If you look at information technology as a sector, communication services as a sector, those are the 2 top performers. Utilities has also done quite well and pulled away from the defensive pack. If you think about,
which is kind of interesting.
Yeah, utilities, staples, healthcare, kind of being that trifecta defensive play. I think that has pulled apart over the past couple of years. So it's not just a year-to-date phenomenon. But, there have been other parts of the market that have done well. So it's not just the AI story in terms of a couple of companies or a handful of companies that are performing well and the rest of the market is not doing well. There is a difference, I think, and an important and a positive distinction versus maybe a year and a half or 2 years ago where there was more of a fraying for the other 493, if you want to think about it that way, where there wasn't as much participation. I would say breadth has held up relatively well, especially, post-Liberation Day. We've yet to have an instance where the percentage of companies in the S&P 500 trading above their 50-day moving average has fallen below 50%. So despite some of the, rumbles over time, even some of the corrective activity under the surface we saw in the summer, it's still been a fairly good year if you were to date it maybe post-April 8th low.
But it was a rough ride.
Oh, for sure. Yeah, absolutely.
A little bit of a bumpy ride.
Completely the opposite of last year. But that's how we've been thinking about markets in this next phase of the bull market. What we've been telling clients is that don't get accustomed to what 2024 was, where you had kind of minimal scarring and volatility at the index level, but that was just really masking a lot of turmoil under the surface. We think that not that we think we get a 20% drawdown every year like we did earlier this year, but that's become more the norm, that kind of choppiness.
So let's go under the surface a little bit and talk a little bit about what we were talking about with Ed Ludlow just now, this idea of circular financing, where there is a little a relationship between the companies that are investing in one another. It seems to be the same names coming up time and time again. They're customers of each other as well.
Yeah.
Is that a risk to the public markets?
It's funny. Lizanne, my boss, and I wrote about this in a report published yesterday about AI. And at the bottom of it, we included a quote from Warren Buffett that says, "Nothing sedates irrationality, like effortless money being thrown around." And there is an instance of that, or an essence of that, where yes, you could look at a lot of this sort of circular financing, as Ed and you guys just discussed, and you could say there is a risk there. I actually always point to the fact, because you'll often hear people who are very bearish saying, look at the concentration in the market. This is so unhealthy to have 10 companies in the S&P make up 40% of that index. You'll have the bulls come out and say and defend it and say, well, their earnings share has also grown. But you could look at that both and say, well, there's concentration risk in both areas. Right. Meaning if the earnings for those large companies start to slow or in the worst case, reverse, then you do have a material risk to the market. But I will say, if you're going to compare it to other periods, because I think the proxy and what a lot of investors do today is compare it back to the late 1990s.
Which makes me wonder if that's even right, but go ahead.
Yeah, I think there are so many differences in the economy, so many differences in the market that you have to pay attention to, which are not, they don't provide the evidence or the support for that direct comparison. I will say, though, I think the one lesson to be learned from that period, or any period where you go through some kind of craze, if you were to single out, the beginning of 2000 as an example, if you looked at the largest companies in the market at that time, at that time was sort of the big five that were in focus. It's not that their earnings just reversed and went negative. It's just that they couldn't keep up with that rapid pace of expectations and the expectations that kept getting ratcheted higher. So earnings in these kinds of parts of the cycle, it becomes more of a game of expectations and where you set the bar versus actual results just coming in positive. I think there's a really important distinction because you can get a lot of hype associated with that in terms of market performance.
So is that you saying then, Kevin, that the AI thing is real, it's happening, but folks maybe, rein in your expectations a little bit?
Yeah, because I think there are enough divergences, and I feel that the post-pandemic economy has really just been K-shaped the entire way. It really feels that way, especially when we go out and talk to clients.
And great if you're on the upper leg, but not if you're on the lower leg.
If you're generating income from assets, if you have a significant part of your wealth tied into markets, of course you've benefited a lot. But there are a lot of people that have struggled considerably, and I mention that because you can look at that split, and there's so many ways to do it and slice and dice it, but you can look at what's been done on the AI CapEx spend side of the equation for something like GDP, and then you can look at the slowdown in the hiring rate, on-farm payroll growth, the uptick in unemployment that you've seen for certain segments of the economy, particularly youth unemployment, which
you were sending posts about this just a couple of weeks ago.
Yeah,
this is something you've been focusing on a lot about.
It's a huge focus for me. Of course, I'm biased because a lot of my peers and friends have been impacted by it. But if you just look at the increase that you've seen in the unemployment rate for the 16 to 24-year-old cohort, that has risen at a pace that is only consistent with recessions in prior instances. And I do think that there is certainly a unique nature to the cycle this time where there are so many indicators that have told us recession for years now, and it just hasn't happened. So I do think it is in keeping with this rolling recession nature that we've talked about a lot and written about a lot over the past few years. But there are definitely cohorts of the economy that have been struggling. So I think that, if that continues and you get more labor weakness from here, it's going to be harder to, I think, just say and point to AI being the only thing that holds up the economy. I do think it's been a significant driver statistically, mathematically, that has been the case. But if labor continues to soften from here, then you run into more issues.
So then you agree with the Fed recent rate cut and that should the Fed do more?
Well, I mean, there's often a big difference between what we think they should do and what they will do. What I think that they will do, I think there's probably a cut or two left. But at the same time, I mean, you read all of the commentary and the comments this week, just in the past couple of days from Fed officials, the ones who are voting, who are actually, making the policy, they've pointed out almost ad nauseum all of the upside inflation risks that still exist. In addition to, downside labor market risk, of course. But I also think that, in terms of inflation expectations, which I will say in fairness, for now, look relatively stable. They don't, they're not setting any alarm bells.
But not at the Fed's target.
Right. So if you're the Fed looking at this where, potentially by the end of next year, they could be 70 consecutive months above their 2% inflation target. And if the labor market doesn't completely collapse and go into a recession, that would necessitate, cuts, which if that did happen, presumably would bring inflation back down to their target. It's not the best way to do so. But if you're looking at that dynamic, I don't really see how this Fed cuts aggressively, especially heading into next year.
We got to leave it there. Come back soon.
Good to see you guys.
So great to see you in studio. And I know we'll continue this conversation.
Thanks for having me.
Be well, be well. Kevin Gordon, he's Senior Investment Strategist at Charles Schwab, joining us right here in studio.
We're probably going to see Kevin before November, but we're going to see him out of Denver because we're headed out to Schwab Impact in the early part of November. So we'll definitely be talking to Kevin out there.
Looking forward to it. All right, coming up next, to shut down or not to shut down the U.S. government, that is the question. An update on that and a key player in all of this, key member of the White House. That's coming up next. This is Bloomberg Businessweek Daily.
It's 2:21 on Wall Street. We do check markets all day long here at Bloomberg. We have got the Dow lower, NASDAQ lower, but guess what? The S&P 500 index just turning higher right now. A little change, but in the green right now with the S&P at 66.63, higher by 2 points, up less than 0.1%. Dow Industrials down 57, decline there of 0.1%, and NASDAQ lower by 18, drop there of just about 0.1%. Our Mag 7 index down 0.3%. 4.9% with the 10-year, ahead of a potential shutdown tonight. 10-year, 4.14% with the 2-year, 3.60%. Keep it locked into Bloomberg Radio and Television for the very latest on a potential government shutdown tonight just after midnight. Gold up $11 the ounce, up 0.3%, $38.45 the ounce. West Texas Intermediate crude down 1.6%, $62.40. And Bitcoin now down 0.8%, $113,395 on Bitcoin. China's state-run iron ore buyer has told major steelmakers and traders to temporarily halt purchases of all new BHP Group cargoes, escalating a pricing dispute that risks upending one of the mining giant's most important trading partnerships. BHP down now by 1.8%. Recapping, S&P 500 index higher, little changed, up a point. Coming up after the close of trading, we will be hearing from Nike. For on-demand news, 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. You are listening and watching Bloomberg Businessweek Daily. Carol Massar, Tim Stenovec. Hey, President Trump, as you know, threatening to fire or do mass firings of federal workers as the U.S. hurdles towards a shutdown with Democrats and Republicans at an impasse over funding the government. That shutdown would happen at midnight tonight. For more at what's at stake and who may be pulling some of the strings on what may happen at the executive branch if indeed a shutdown happens, Nathan Dean is with us, Bloomberg Intelligence senior policy analyst out there in Washington, D.C., and right here in our New York studio, Max Chafkin, co-host of Everybody's Business podcast, author of The Contrarian, Peter Thiel, and Silicon Valley's Pursuit of Power. Nathan, I want to shoot it out to you first. Where are we on the shutdown? What might cause this actual shutdown? What is it that the Republicans want or won't do? What is it that Democrats want and won't do?
So right now, both sides aren't really talking to each other. They're sort of in this weird waiting game at the moment as we get closer to midnight. Now, I think the Democratic, from their perspective, there are two wants going into this shutdown. The first is really being driven by the House progressives, and that is they want to be seen being very tough in combating President Trump on his policies. The other thing they want is they want an extension to ACA or Obamacare subsidies that are going to be expiring at the end of the year. From the Republican perspective, their wants are a little bit different. They've already passed via the House what is known as a clean CR that gets us through November 20th. And generally speaking, the party that passes that clean CR feels that they have a moral high ground. Now, I woke up this morning thinking that there was a chance that we would not go into a government shutdown and that something would happen to make a deal. But as we get closer and closer to midnight, it begins to sound like both parties feel that they are in the best political position possible and that both sides think that a shutdown will end up helping them politically. And that's usually what happens when you have a shutdown. So if a shutdown does occur, we'll wake up tomorrow and we'll have to deal with the short-term impacts because I don't think this is going to go more than a week or so. I think really the next real negotiation point, if the government shuts down, will be next week when the House Republicans return.
Well, Nathan, what are the political implications of a government shutdown? You said both sides think that a shutdown will help their own side, but what are the implications? We have a little bit of history to look to.
Yeah, absolutely. I mean, one of the best case scenarios is go back to the Tea Party of 2013. And there's this very similar playbook that it's happening to that. Now, from the Democratic perspective, they want to be able to essentially combat President Trump. Their approval ratings, not that good at the moment. And, there's plenty of time between now and November 2026 to be able to turn that messaging and at least start to build momentum off of that. Now, there is some local politics here at play. Virginia and New Jersey both have governor races in November. I would anticipate if President Trump and the Office of Management and Budget were to begin to follow through with mass firings of government workers, that's going to impact Virginia and Maryland pretty significantly. I would expect those policymakers to come in and say, maybe we should stop this and turn things around here. But if the shutdown occurs and Democrats start to take the blame, then I think you'll see those politicians in Virginia and New Jersey get a little nervous.
It's like you just delivered a ball into my court perfectly. You mentioned the OMB, which takes us to Russell Vogt. Max, you wrote an in-depth profile earlier this year, back in April. It was a big take. You talked about the architect behind President Trump's imperial presidency. Vogt, not usually out in front in the Oval Office or at a White House press conference, and yet he was yesterday afternoon, along with the Republican leadership. He was front and center. He went to the mic, made some comments outside the White House after that meeting in the White House with minority leaders. remind us who this guy is. He's very, very influential when it comes to the Trump White House.
Yeah, as you said, Carol, he is the head of the Office of Management and Budget. But I think more importantly, he is one of these kind of behind the scene intellectuals who helped shape this presidency, who worked on Project 2025, who basically after Trump's last term spent 4 years essentially planning for what this presidency was going to look like. And Trump, and we talked about this a lot, at the beginning of the year, but Trump was unusual because all these people around him had a long time to plan. And a big part of the plan, of course, is massive cuts to the budget and massive cuts, crucially, to the federal workforce. We saw a little bit of that, or more than a little, I'd say, with Doge and Elon Musk's efforts, and this has been going back and forth. But a budget shutdown, a government shutdown, would be a huge opportunity for vote and for people who are sort of aligned in this direction to do something that they've wanted to do for a very long time, which is essentially take a bite out of the federal government.
So what is this opportunity, Max, for him, for his role at OMB, but also his role in Project 2025 and shaping what he wants the presidency to look like? So
the ideological idea is that there is this kind of like fourth branch of government, like, you sometimes hear people talk about the deep state or something like that. This is the idea that there are civil servants who are operating outside of the realm of the president, who are just doing whatever they want. This is an attack, of course, that Donald Trump sort of pioneered during his first presidency when he would complain about the deep state. And Vote's idea is to weaken this, and weaken it both by making it more responsive to the president. And like that's a key part. When you hear people talk about the unitary executive idea, it's the idea that the president, not these quote unquote unelected bureaucrats, should be deciding what the government does. But also because there's going to be they've wanted to fire people for a long time, and you're going to have a government shutdown. You could imagine Vote and others inside of the Trump administration seeing this as an opportunity to do something very drastic and blame it on the Democrats and be able to say, hey, this wasn't, because it didn't really work during the Doge episode, because people got mad at Elon Musk, and you had a lot of Democrats sort of beating the drum about saying, oh, you're waiting for Social Security to talk to somebody at the Social Security office. That's Elon Musk did that, and that made Musk very unpopular. It also caused Trump to kind of back off. He had talked initially about using a chainsaw, and then he was like, oh no, we're actually using a scalpel. But now, if we have a government shutdown and the Trump administration is able to blame it on Democrats, then maybe that gives them the ability to try to do something more drastic they weren't able to do earlier.
So Nathan, come in. How exactly do these job cuts work in a government shutdown? And this isn't just something specific to a Trump White House, right? I mean, does any president have the ability to cut jobs, cut costs, if you will, in a government shutdown?
Well, obviously this is a new legal issue that's going to most likely come up if it happens. But one thing that we've already noted is that Russ Vought, when he's provided guidance to agencies in terms of deeming who is essential and who is not essential, he said specifically that those individuals that are working on reduction in force plans should be deemed essential. And there's this theory out there that if the Congress isn't available to essentially do its job, then the White House has to come in and step in and do it for them. So I would say, though, that right now we're in the state between the Republicans and Democrats where both sides are essentially talking past each other, and there's a lot of threats going on. But I would also remind folks that Doge cuts weren't popular with just the average American because of the reasons Max was laying out there. And so even though you're hearing threats like 750,000 government workers will be furloughed and a lot of them may not come back, there is this ultimate decision that's going to be made by the president. And if Congress comes together and makes a deal by, say, early next week, I think they'll be able to get in front of the OMB and stave off a lot of these job cuts.
But it does make me think, Nathan, about the power of the purse and the whole idea of, a balance of powers. It's why we had these three different branches of government, right? And what does it mean if ultimately, though, the power of the purse is not in the hands of Congress?
Well, and this is what the Supreme Court is sort of moving forward with at the moment, with this idea of being able to claw back unappropriated funds and this pocket rescissions that we saw come forth right before the month of September. And what I would say here is that, Congress obviously does not like it. Republicans and Democrats alike do not like it when the White House decides that, yes, you've spent all this time appropriating and we're just going to claw it back anyway, which is why I think eventually we could be in a scenario where, this government shutdown may be the norm over the next few weeks, because even if we get a deal, it's not going to be a 12 appropriation bill sign off full budget like we haven't seen in many, many years. It's going to be another kick of the can. And as we get closer to November and as we get closer to March, meaning the end of these Obamacare subsidies, and then further into the election year, both sides are going to want to play for more political points. And so even if there's a deal that's done next week, we could be talking about a shutdown again in early 2026.
Hey, Max, you wrote this story back in April about Russell Vought. To what extent is his vision for government coming true right now, and how much does the government shutdown play into that?
Well, I think
provide an opportunity
the point
for it?
that this is still in flux. And I think there's a question about, it's true that Russ Vought and people who are aligned with him would very much like to drastically cut back on the government. They don't care if it's politically unpopular at the moment. Trump, of course, cares a lot about that. And we've seen over the years that he can be responsive to pushback from either constituents or in polling and so on. And so I think we just don't, I think, know how this is going to play. I will say the question of the courts, like Vought has basically said that they plan to challenge this thing called the Impoundment Control Act, which is a 1974 law that Congress passed, essentially forcing the president to spend the money that had been appropriated and then creating this mechanism to ask for rescissions, like a legal mechanism. Vought has said they're going to follow the law, but he's also said that he believes that the law is unconstitutional. And so that could be where this is heading, like a legal battle that will pit essentially the Trump administration against Congress.
Hey, last question to you, Nathan. We have a terminal user sending me a message, and I think this is a fair one because he writes in, both sides have said the bloated federal government needs to be trimmed massively. Why should anyone be against that? I mean, there is something to that. And, it kind of begs the question, why can't everybody get along and figure out a smart way forward? Just got about 30 seconds here.
If it was easy, they would have already done it. I mean, we're talking about the Federal Register has over 430,000 pages, and this is all the regulations. So if you have to go through and you have to decide what to cut, you have to comb through 430,000 pages and ultimately decide if you're going to cut something, it doesn't break a statute or a regulation. It's just not easy because both sides said they would want to do it, but if they wanted to do it, they would have already done it.
Yeah, the answer to that question is voters. Voters don't want to cut. And when they've showed it over and over again.
Right, exactly. Just, somebody else, but not in my state or my territory. Guys, unbelievable. We wanted to do this yesterday. We had a lot of news flow. So glad we could have you back. Nathan Dean, Bloomberg Intelligence Senior Policy Analyst, Max Chafkin, co-host of the Everybody's Business podcast, author of The Contrarian. Unbelievable. All right, when we come back, we're going to talk a little bit about the demographic shift that's underway, Tim.
Yeah, when it comes to money, that as we continue on Bloomberg Businessweek Daily.
It's 2:40 on Wall Street. We do check markets all day long here at Bloomberg. We've got 1 hour and 20 minutes to go until we wrap up the trading month of September, then on to October. With the Dow, the S&P, NASDAQ right now, we are trading for the most part lower. S&P 500 index does remain higher now. A little change, swinging between gains and losses, but right now up under 0.1%. The Dow well off session lows, looking at a 29-point loss right now, down 0.1%. And NASDAQ lower by 12, down 0.1%. So stocks here limping into quarter end, all because of concerns about the shutdown. Right now, the 10-year 4.14%, with the 2-year 3.59%. Spot gold up $12 the ounce. The precious metal up by 0.3%. West Texas Intermediate crude oil down 1.5%, $62.48 a barrel on WTI. Speaking of crude oil, ExxonMobil shares down 1.9%. Exxon plans to cut about 2,000 jobs globally as the Texas oil giant consolidates smaller offices into regional hubs as part of its long-term restructuring plan. Other oil companies, oil majors lower. ADRs of BP, they're down by 1%. Chevron down by 1.1%. Again, ExxonMobil down by 1.9%. So recapping here, we're looking at the Dow and NASDAQ. They are both lower. We've got the S&P 500 index higher. Little change right now, up by about 0.1%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. So women are controlling ever greater sums of money around the world, setting the stage for major shifts in wealth management and philanthropy. In the U.S. alone, McKinsey expects women to control $34 trillion, or roughly 38% of investable assets by 2030. That's close to double last year's total. The figure was just $7.3 trillion. That was 29%. That was about 10 years ago, Tim.
The worlds of finance, wealth management, and banking are all recalibrating for this great wealth transfer. With more in our new weekly discussion on women, money, and power, where we explore the economic implications of these changes and how to navigate them. We welcome April Rudin, founder and CEO of the Rudin Group, and Nick Rice, director at Brunswick. They're the co-authors of the forthcoming book, Wealth Management with a Difference, Your Guide to Achieving Client, Generational, and Business Success. It comes out late next month. They both join us here in the studio. Welcome to both of you. We've been talking about this great wealth transfer for quite a bit of time. I mean, purely demographics, when we think about aging baby boomers and then who ends up receiving those funds. I want to start with you, April, the economic implications of these changes and what it means for new trends when it comes to investing, saving, and of course, giving.
Well, it's huge. It's as you said, it's the intersection of all of these different factors coming together. There's never been a better time to be in wealth management. I would say the opportunities for financial advisors and for all firms that are serving in financial services, that sector of women is gigantic, because you have financial advisors that are retiring. You have women inheriting more money. It's actually more of a wealth transition we're going to talk about rather than a wealth transfer, because it's actually vertical, right? Women live longer, and so before that wealth transfer has happened, there's going to be a wealth transition.
Why is that an important distinction?
So I started my firm 17 years ago talking about the wealth transfer, and it actually hasn't really happened. You still, from those McKinsey stats, you have people still talking about it's going to happen, it's happening, is it happening? And now, and people were under the impression that the transfer was also going to go to Gen Z,
right?
But actually it's going to go to Gen X. And Gen X are now in their 60s and approaching retirement themselves, some of them. So I think it's more complicated than what people think. And so it's important to pull it apart and understand more about what's happening.
Nick, I want to bring you in. So how much do things change when it comes to the investing world and the approaches? Like, how much is going to be different? Because it's interesting that, we sometimes men versus women and the distinctions, but is it all that different?
Yes, so there's going to be significant change. I think all the data shows that women are very, very passionate about using their investments and their philanthropy to fulfill specific purposes and to ensure that they have impact in a way that might not have happened in the past, or they might not have had the tools to do that always in the past. There's been a strong trend towards philanthropy among older generations, but female clients, particularly the younger generation, are more focused on measuring that impact, generating that impact, and also making money through purpose-driven activities.
So where, on the impact side of things, where does that end up going?
So it varies, right? So you can look at it through a sustainability framework. A lot of clients prefer to look at a sustainability framework targeting things like the environment or social causes.
I thought we stopped caring about that.
Well, some clients don't choose to look at it through
sarcasm,
a sustainability framework, right? It varies depending on the client, but a lot of clients target the same underlying causes, whether or not they use a sustainability framework. You can target healthcare as a client through your investments, through your philanthropy. You can use a sustainability framework to do that, or you cannot use a sustainability framework. There are various different ways of cutting the pie.
I want to bring you in on the same thing. Like, why is it so different? But we hear from Nick that, yes, it will be different.
Also, to your point, I think sometimes U.S. is very U.S.-centric, and whereas that might be true in the U.S., our book is for a global audience, and that has not died down in Europe and Asia. Impact investing, sustainability is really hot and is something very important.
I love that you went there. We're just coming off the UN General Assembly, and we did a big broadcast last Wednesday from the Plaza. Bloomberg does a big event, a global forum, and I felt like most of who we talked to, a lot of European officials, and yes, talking about alternative energy, renewables, how it financially makes sense, that nothing's changing. And that really struck me in those discussions.
Well, it struck us because here in the U.S., we the changing administration has really changed the tone when it comes to renewables and also when it comes to foreign aid. And pretty much every guest we spoke to, Carol, at that event was talking about how to maximize the impact of foreign aid and how to maximize the return from renewables.
Yeah, I think it's kind of fascinating.
So that's one of the reasons why we went global on this book. And we spoke to 80 senior leaders across the world because more and more firms are global in nature and more people are mobile in nature. And so having a better understanding of what our world is and technology connecting us is truly important. Even visiting some of the headquarters of some of the firms, you can see a huge difference where some firms are very traditional in the way that they look. Other firms have a more sustainable approach, as Nick was saying. You see firms that have more green, more exposed brick. You know, in London, they've purchased a building and have redone it, something we don't really see here in the U.S., where we're just going to, knock the building down and build something back up again. But there's an effort to create sustainability and demonstrate it through their brand.
What does this mean in terms of money flows? So we are Bloomberg, and that is something, whether it's a fund advisor, whatever, Tim and I constantly talk about where the money goes. So Nick, where does the money go potentially as we see this this wealth transition? Where does it go? Is it greener, sustainable efforts? Is it more global efforts? Like, how do you see it playing out?
I think alternatives are a big piece of this. We're seeing increasing capital flow towards alternative investments, specifically towards
private credit and things like that?
Private markets, but also digital assets, right? And we've seen the rise in vehicles that will enable that, right? Be those through new types of vehicles that wealth management clients can more easily access, or also increasingly through retirement plans, right? We saw the executive orders the other week. That's an important part of it. Also, international is a very important part of it. I think people thought with deglobalization that it would just make people more domestic. In reality, it makes your international footprint more complicated. And we're seeing a lot of wealth managers retool in order to account for that greater international footprint.
April, I want to finish where we started with you. And you said that there's been no greater time to be in wealth management. If you would have told me 10, 15 years ago that that would be the case for 2025, I wouldn't have believed you, because we saw the rise of robo-advisors, passive investing, the idea of setting it and forgetting it, which I thought millennials would be doing. Make the argument and make the case that people are paying that higher fee to get that personalized advice.
So it's really the confluence of all these different things happening. It's more and more advisors retiring. It's volatile markets. As the mother of 2 Gen Z kids, I'll tell you that they're more conservative than what people think. And I think they want to have bigger brands that they rely on. So I think there's an opportunity there. I think that there is a general need for more financial literacy and around that, because even for financial advisors. I was just going to add one more thing, which Nick and I always talk about. There's been a real shift in who is a financial advisor and how to recruit people into it. Only 15% of the workforce is women. And traditionally, finance majors have been recruited. And now, not so much. Yep.
We have to leave it there. I hope we can continue in the future. April Rudin, of course, of the Rudin Group, Nick Rice of Brunswick, and check out their book, Wealth Management with a Difference. And also, we have a special event in London, Women, Money, and Power. Be sure to check it out.
You're listening to Bloomberg Businessweek Daily with Carol Massar and Tim Stenovec on Bloomberg Radio and Television.
All right, everybody. Yes, indeed. Bloomberg Businessweek Daily. Carol Massar, Tim Stenovec, live here at Bloomberg headquarters in New York City. Bouncing around on the equity side, getting ready to wrap up the month of September and the third quarter. But, Tim, we're kind of near our best levels on the S&P 500 right now.
We are. Don't forget, we're still expecting companies to report after the bell.
Wait,
Nike's a big one.
Earnings?
Yes, Nike's a big one. We'll give us a nice little read on the consumer, the company in the midst of a turnaround, get a read also on what's happening outside of the U.S.
China, always important.
Yeah, so we'll see.
All right, looking forward to that. I'm Carol Massar, along with Tim Stenovec. Let's take a look at some stocks on the move today. With us is Bloomberg TV markets correspondent Norah Mulinda in the house. And yes, we are watching the drug names, in particular Pfizer today.
Cannot stop. We see Pfizer is the second biggest gainer in the S&P 500 today. That's ticker PFE. Of course, we know this stock has really been in focus. Largely Trump involved today. So essentially, they're going to be getting a 3-year reprieve, specifically as it relates to those pharma tariffs here. And of course, we know this has been promised and coming in terms of the tariffs. So the fact that they are able to miss that aspect is, of course, a positive here. We're looking at shares of Pfizer up about 6%. 6.7 or 6.5%, and when it was at its highest here. That is its biggest intraday gain since May 2024. So really seeing some strong gains here. Of course, they also talked about the fact that they're going to be selling some of their drugs at a discounted price, slashing it by about 50%, that discount there. And this, of course, will be marketed here on Trump RX, which is a direct-to-consumer website.
So is the expectation they're going to make it up on volume? And so, because it's a price cut. So I'm trying to, and I understand it sounds like they're also maybe cutting out the PBMs and the middlemen, but I'm a little confused.
You want to know the logistics here.
I'm a little confused.
I think the message is also one of playing politics. And I don't mean that in any sort of pejorative way. I mean in a way that look at the reprieve that they were able to get as a result of what the White House, doing what the White House wants it to do.
But I feel like this, I don't know.
You also see peers higher. Eli Lilly higher right now by 5%.
Merck is up 6%.
Definitely positivity all across that industry right now as you look at what the market's doing right now. But I wanted to move over into some of those recent IPOs. So CoreWeave, that's ticker CRWV. We know that this one IPO just back in March here. We're looking at shares that are higher.
It's a shame it's not having a good year.
I mean, shares of CoreWeave, when we're looking today, though, in the green.
I'm being sarcastic.
Up as much as 16% in trading today. And this, of course, is after it set up a deal here, $14 billion with Meta. This, of course, highlights the demand for artificial intelligence. I mean, this is a story that we've been hearing over and over again. Doesn't matter what industry we're talking about. AI is the story here. But this deal with Meta Platforms runs through December 2031 with an option to extend through 2032 here with additional capacity. This should help diversify CoreWeave's business away from Microsoft.
We did have a good chat on our program with Ed Ludlow of B Tech. And if you missed it, check it out on our podcast feed. But he interviewed the company's CEO just last week on the close. And it's really interesting because it's a lot of like strange bedfellows here when it comes to who's buying what.
Right.
And as Ed mentioned, it just goes to show you got to diversify your sources of this because this is a finite resource. People want compute and they want it now.
Well, and he made the point that, they had so much exposure to Microsoft in particular. And this shows that it's expanding in terms of its customer base, which is something investors have wanted to see, which is kind of explaining why we're seeing the stock up today.
Only adding to their gains, up 242%.
Like I said, if only they were having a good year. They are having a great year.
Fantastic year.
Let's get to ticker Fly.
Yes, so not doing so hot today. We're actually looking at shares of Firefly Aerospace down today in trading. And of course, this is the company that IPO'd just early August. So lots of IPO activity as we're seeing here across different industries. But shares of Firefly Aerospace are falling today in particular after there was an explosion when they were testing one of their rockets. And so, of course, that mishap is really sort of delaying a lot of the expectations that they had in regards to some of the planned launches for both their Flight 7 and Flight 8 by year end here. So that schedule now looking a bit unlikely. We're hearing from analysts across Wall Street. But this marks the second mishap that we've experienced here with Firefly Aerospace. They had Flight 6 that was lost just back in April. So all personnel are safe here. But of course, this did result in the loss of a rocket stage here. Shares are down for their worst day on record. But of course, that's since it IPO'd just back in August.
I'm so sad you didn't do LW.
Ooh, I should have.
Lamb Weston.
What, you want to talk fries?
I always want to talk fries.
Did you use that as one of your gainers?
Have you met me?
I was going to send that to you, shaking your hand. That's the true story about Carol Massar. If you want to
make her happy,
give her a nice surprise, buy her a side of French fries.
Which is what Tim does when we travel together, because he's always hungry and he just gets me fries because he knows I love fries.
Any preference, Curly?
Made of potatoes.
Right.
Yeah, exactly.
So any and all. She'll take any of them.
Anyway, it is up about 3.7%. It did come out with earnings today, and it topped estimates. Restaurant traffic gains, especially I think some chicken companies or something, chicken restaurants, which showed that restaurants are figuring it out, like how to sell.
Trying to get through.
Yeah. Chicken fast food restaurants and
French fries. This is the Lamb Weston quarterly report from Carol Massar.
Right.
You can count on it 4 times a year.
All right, that is Stocks on the Move with Bloomberg TV markets correspondent Norah Mulinda. Check out our Stock Movers podcast, 5-minute episodes, biggest winners and losers. Find it on Apple, Spotify, Tim, or anywhere you get your podcasts.
T-minus just about 9 hours until a potential government shutdown. We are all over it next on Bloomberg Businessweek Daily. On TV, it's The Close. This is Bloomberg.